I'm Tanya from Claude Business Services and Tanya's Bookkeepers Bootcamp, where I help accounting pros maximize their potential with confidence and efficiency. Welcome to AI in Action. Each week, I'm breaking down real use cases and showing you what works, what to avoid, and how to make AI work for you in your practice. So how AI amplifies us, not replaces us. So this week, we're going to dive into something really cool that I came up with, and I want to show you how Claude, especially because this is more accounting pros here, Claude is niching in it, and what I did with Claude this week and how I used it to track down something in the accounts that just wasn't balancing. So what we've got here, I'm sharing the Claude screen. This is basically an AI in action case study. It came up with for me a document. What I asked it to do is, where is it? There we go. So I said I wanted to do an AI recording for this because it's very cool. I don't want to show everything up top. I basically spent days on this project working back and forth using Claude as a soundboard to find out what and analyze to find out where the issue was in the client's files. There's a lot of names on here, so I don't want to show that. I gave up after about 10 minutes of trying to blur them out. I said, forget it, we're just going to do something else. So I went in and I asked it to summarize so that I could do this on the video call. I'm going to tell you how smart it is, because you can look here. Nowhere does it say AI in action. I have barely mentioned that in Claude, to be honest. I mention it in ChatGPT because I'm playing with it more. I'm coming up with ideas. But when I come up with something in Claude, I just do it and record. So it actually came up with a video script for me. And I'm like, yep, nope, that's not what I want. But look, it's called Video Script AI in Action. I'm like, that's cool. So I'm like, nope, I don't need the video. I just wanted to show what I did to explain to you without having the client information and without seeing my days and days and days of going back and forth with this. So what is in this document is the situation. So what the problem looked like, how we used AI, what I uploaded, what it found in the data. The root cause was a product and service mapping error, shown with the wrong versus correct journal entries side by side. Went through the client communication challenge, so the income reassurance, why it mattered. There were 6 correcting journal entries, prior year, current year, clean tables, all 8 documents provided of what I uploaded, what AI did versus what I did, so side by side, no ambiguity, who made the final decisions and the findings at a glance. So I have already downloaded this, so let's go ahead and get this open on big screen for you. So it created this in a doc. I have not touched this. I have just opened it now for the first time, as a matter of fact. So let's hit, we want our view just to be vertical. Maybe if we make this little, no, there we go. Okay, so here is it. We untangled a property management trust accounting problem. So real live case study. So here it is. Property management company was using QBO to record their business. The banks were all reconciled. Revenue looked reasonable. One problem kept nagging. The rent clearing account carried a growing balance that never zeroed out. So no matter what we did. So a screenshot of an invoice showed the problem. There were 2 different things that the client was putting in. Total rent received is X. This was put in a message. So nowhere was it put money coming in, money going out. So nothing was balancing on that. So essentially the clearing account was accumulating credits because money was going in, but it wasn't matching outgoing entries. And books only recorded fee, not the full trust cycle. So the full ledger, I uploaded the full ledger. 6,600 rows of transaction data was uploaded. No manual filtering, no pivot tables. Plain language question, what is happening? Why is it not zeroing out? So it went through, trust account checking, things were bypassing clearing altogether, went through. So we needed 2 steps and the client was trying to do everything in 1 step. Sorry, we needed 3 steps. If we're not doing it by journal entry. Journal entry, we could have done it 1 step. Client wants to be able to send these receipts off or invoices off. So the client's collecting the money, the rent, keeping his fees and paying the owner the difference. So that's what was happening. So one amount was being received, part of that was being paid out, part of that was not being recorded at all, and part of that was going towards income to fees. So we're going through here. Again, there was a manual HST line where there were some minusing some of the fees, which ended up throwing negative into the sales at the end of the day. So there were multiple issues here. There was 12 negative line items with no descriptions, debiting revenue. So these were pass-throughs. So we're using Buildium as well. HST deductions from Buildium had been posted to a clearing account instead of HST payable. So there was a misclassification there. Went through all of this. Now, we didn't handle the income side of things. That is not something that we generally do with our clients. So here's where everything was wrong. So we found out what the root cause was. We had to go back and forth. I knew what the root cause was, but I didn't know how to fix it. I was chasing my tail. I couldn't see the forest through the trees. This is something where I normally would have, after, so long, would have called up one of my friends and said, hey, let's help me with this. I need to see the forest through the trees. And I was rebuilding back a year and a half to try to get everything corrected. So once we realized we needed to create a new trust payable account to move things in, get things set up, again, we could not do it in 1 batch. We had to do it in 3. So it's interesting. So we're going to go through here. Then the client is, again, they're not an accountant. English is not the first language. Business is not their first language as well. And accounting is not their first language. So it was difficult because they were doing what made sense to them, which did not make sense for accounting. They were not putting the rent received because they say it's not income. Well, that's fine. We went in and we created a rent received, which mapped to a rent clearing account, which we end up changing that to the owner's liability account. But we're like, that still needs to be shown in there. It's not income. It's not taxable. It needs to pass through. It's out of scope. Nothing to do with anything. Here's the corrections. Again, we had to go back and forth because Claude kept trying to say, nope, do this, do this, do this. It didn't understand how we were using the clearing account, and again, couldn't dive in to some of these. So to make sure that we had the proper 3-step process, here's the journal entries that we ended up putting in, which essentially, and we created the account, moved everything, realized that, again, some needed to be moved to sales. We do have the backup to prove it, that the sales were actually being debited in the back end, the way some of these went in. So we had to correct the sales. There was amount sitting in AR from an invoice. Meanwhile, the money had not been received to that. So I had to correct all of that at the same time. And then we had last fiscal year and this year to date. So we then, Claude then produced us an audit trail and a client handbook, step by step. So I uploaded screenshots of our 3 steps. It included the screenshots in the handbook. It was very, very cool. Written for a non-accountant. SOP. We've got the full accounting, entries behind each step. There was an internal version for CBS, and in case the accountant wants to see it, of the internal audit trail. Everything in there. And it looks pretty, just like this one does too. So we've got the prior year audit trail, the current year audit trail. Came up with a message for the client as to what we're doing and a visual flow diagram as to how it should be. Claude did this automatically. Client explainer document and a GL correction schedule. So full analysis of the 12 bypass transfers, dates, amounts, period, 3 journal entries with supporting schedules, expected balance table before and after. All we knew what to be true is we knew what the bank account balances were because they were reconciled. We knew how much money was owed back to the owners that the client was holding on to, and we didn't have confidence in the sales the way it was being entered. So here's what AI did do and what didn't do. AI read 600 rows of GL data and identified pattern instantly. Well, when I put it up, I had to go and do some other work. It took about 20 minutes to go through. So there was a lot of back and forth time. I would load this up, go do some other work, come back, and when I say come back, it's just on a different screen, so I can see when it was starting to do that. I could see it starting to think, challenge it back and forth. We spitballed back and forth. I decided which questions to ask, what to upload. I challenge the AI when the answers do not make sense, and that is something that we need to do. We have education in this. We need to challenge it. It was wrong. If I go back and look at the first answer, it was wrong. All there is to it. Did not work for us. Did not work properly in the books. Identify the product or serving mapping as the root cause. What I did, I corrected the AI on the JE offset, the retained earnings versus revenue. It was trying to dump some stuff into the retained earnings. And I'm like, no, I don't want it there. It then tried to say, oh, let's put it to shareholders. No, we need to know what is true and need to be able to back this up. So then I pulled the sales journal, uploaded that. So what I did upload initially was the GL, P&L, and balance sheet. Then when I turned around and I was challenging on where, so we knew what had to be done. We just had to determine where to balance everything off to. I'm not going to throw anything into sales without making sure it's proper. So then I uploaded the sales and it caught it. And it even said this invoice, this invoice, this invoice, and named the invoices, the client's names on the invoice, and said exactly what the problem is. So that's really cool. It produced plain language explanations for a non-accountant client. I confirmed the trust balance was correct and reconciled. It built all 8 documents with actual numbers from actual data for the client, for the internal. I made all the accounting decisions and posted the entries. And then we had, it was out by 23/26/44. So I threw that into an escalation account. It's a suspense account that we use internally. It's escalation. So that means that the team is not able to determine how to fix it. So it gets escalated up to me. And then we needed to find that, and then, okay, it says, nope, here's the invoice. You need to void an invoice. So I said, nope, don't want to do that. It was a closed period. So we did a journal entry to fix that. So very interesting on that. So AI didn't do the bookkeeping. I used AI as a tool to go faster, go deeper, deliver more with full professional judgment applied at every step. So I know for a fact, and this is built and beautiful instead of like, oh, I don't know, let's just dump it here. You know, accountants might have looked at this and said, this is immaterial, let's just do this. To me, as a bookkeeper who lives in the detail, I cannot stand that word immaterial, although I do use it sometimes, but I like to put everything through. We have the trail to go everything back. So I guess this is, you know, where I should probably get in and do some forensic auditing, because that's basically what I want to do. We need to make sure. So findings at a glance, you know, there was $47,000. There was no trust liability account, and the bank was unmatched on the balance sheet. So we created the trust payable account, did the journal entries to establish correctly, and there turns out there was a product to service mapping error in the back end for the trust receipts. They were crediting the revenue, not the liability. So I know I set it up properly. I don't know how that got fixed or got changed, but it did. So I went back up and fixed it, closed the books, we're done. And then the revenue was reclassed to the trust payable. It is now mapped correctly. We cleared, the clearing account balance had $28,000 that was unmatched. We zeroed that to the trust payable by journal entry. There was some HST off, so we had to reclass that. The current year clearing balance was unresolved, so there was, we were out by 88,68,96 once we did some corrections, so I had to find that. There was negative sales lines, which I had proof of over $5,000. There was an invoice used for trust receipt, so there was false AR, negative fees, manual HST, so that had to be cleared and correctly resolved by journal entry. And at the end, all bank accounts, trust, checking, credit cards, all remained reconciled. Their balances did not change. Confirmed they were correct throughout. No adjustments to any bank account. And I did this. So this is something that I probably would have spent head down for days trying to go back through and figured it out. You know what? This was probably about 20 hours in total still. But that 20 hours was me still also doing something else while Claude was looking and thinking. At the end of the day, this probably, boiled down to, definitely less than that, maybe about 5 hours, but this is something that I would have called and brought another person into, and we would have been digging in again. Think forensic auditing style is the style that we had to go in and do the digging to look at this and really make sure that we were not missing any part of the picture. It wasn't just a quick going, connect, clear. There was many things. So that was just really cool, and it was really cool how it created the handbook for the client, how it created, without me asking, how it created the internal audit, the internal auditing papers, so that we could have everything. So very, very cool. So anyway, go ahead, use it for your deep analysis. It works wonderful. Just don't trust it. Make sure it makes sense. Challenge it. That is the thing that we need to do. Had I taken it at its top, everything would have gone through, everything would have balanced, but I guarantee you it would have not been okay if there was a CRA audit, or when it got to the accountant would have caught it. That's, again, just like dumping stuff under the bed or in the closet and shutting the door. That does not happen with any of my work, and I was able to work through this in a way that was not as frustrating using Claude as my counterpart to work this through with. So try that. If you've got something else, try to work it through. This is the third case this week that I've worked through, and it does this. It brings up audit trails. It does everything beautifully, and is that sparring partner when you're, to help you just look at things a little differently, to help you get there quicker. So there you have it. AI working with you, not against you. Remember, our expertise, our judgment, and client relationships, those are irreplaceable. If you found this helpful, hit that like button and subscribe so you don't miss next week's episode, and share this with a fellow accounting pro who needs to hear it. We're all navigating this AI shift together, and the more we share what works, the stronger our profession becomes. Do you want to dive deeper? Head over to Bookkeepers Bootcamp.ca. We've got training, coaching, and a community of accounting pros who are mastering business together. Until next time, keep learning, keep growing, and keep showing the world what accounting professionals are really capable of. This is Tanya signing off. See you next week.